Good morning, everybody. Welcome back to Schwab's YouTube coaching channel. It's our Wednesday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from Denver, Colorado today. As is usually the case on a Wednesday, pleased to be joined by my friend and fellow Schwab coach, Mr. Brent Moores. Good morning, Brent. How are you?
I'm doing great, Kevin. Good to be here with you, and I'm excited to talk to you this morning.
Yeah, stop me if you've heard this, Brent. We closed at another all-time high yesterday, the S&P 500. It's a bit more of the same of late. And what's interesting about it, I think, is that there continues to be a pretty fair level of concerns and worry in the market, and yet that climbing of the wall of worry just seems to persist, doesn't it?
Yeah, it's more of the same, and so we're going to deal with it. We're going to talk about trading and how traders can, utilize different strategies in this type of market. Every market's unique, but this is one where hopefully it's beneficial to everybody, and we can all kind of learn together here.
That's exactly what we strive for on Trader Talk, obviously, is a broad discussion covering multiple topics and try to level set us for the day today. So that's what we're going to do here, everybody. Today, we are joined by Cameron May there in the chat, so you can say hey to Cam. He'll keep an eye on your postings, your comments, your questions, answer things that Brent and I are unable to get to. But of course, we want to hear from you. Please feel free to post in there for the duration. We go about 45 minutes in total. Additionally, if you're not already doing so, please follow us on on X. You can do that for us individually. I am Kevin Horner CS there. Brent is available at Brent Moores CS and Cameron at Cameron May CS. It's a great way to follow us outside of the classes that we host for you here on the channel. And if you'd like to engage with us on X, please don't hesitate to do so. Additionally, make sure you're subscribed to the YouTube channel here as well, so you're getting all from us at your fingertips. Now, let's review our disclosures so we can get into the discussion. Please remember that our conversation here is exclusively informational and educational. We do not make recommendations. We do not make endorsements for a specific approach to trading the market. We will cover technical analysis. We'll discuss concepts and strategies traders choose to employ when placing their own trades, but it's important to remember that technical analysis is merely a piece of the puzzle. We do not encourage you to make decisions on trades exclusively on technicals. All right, as far as our agenda, it's more of the same here as well. It's a top-down review. We start broadly. We'll look at the S&P 500, the NASDAQ 100, the Russell 2000. Probably need to peek in on the semiconductors as well. And we'll make note of some sectors that are moving around today to get a little understanding of maybe leadership and laggards, which aren't going to be too shocking here, everybody. Many of those leaders and laggards are going to be familiar for us. So we will start us off, Brent, as we usually do, with the S&P 500. I'm going to bring that up. And not just a new high today, Brent, but a gapped move to the upside here right off the jump.
Yeah, and I was looking, we had what was an all-time high a couple weeks ago. And yesterday we kind of just barely exceeded it, but kind of still in that ballpark. So I was a little curious to see where we'd start off this morning. But, it seems like in the absence of like really bad news, the market's just been going up, and that's what's happened. So all-time high in the SPX. And, last Wednesday, well, I guess it was 2 Wednesdays ago, we were talking, Kevin, and we had pierced below that 20-day moving average.
Yep.
And we were saying, hey, that's actually it didn't bounce off it like we had been doing for a couple months. So the question was, hey, were we going to bounce? Were we going to pick up support? Indeed, we did. And that was like a really bad, kind of a bad move. And now we're back. Now we're back here, and so the market has just been resilient.
That is a perfectly appropriate word here, isn't it, Brent? Resilient, because as you said, we were positioning all the while and discussing here on Trader Talk the 69 consecutive closes over the 20-day in the S&P and the same in the NASDAQ 100. and talking about how that one candle could have been instructive for traders because it not only broke the 20-day, but it broke the 20-day on a significant piece of news, that being the adjustment and revision to the jobs numbers, and such a major adjustment that it really kind of scared the market. And I think a lot of traders could be forgiven, Brent, for reducing position size on that 1 day below the 20-day moving average. And yet it's a good reminder of why traders incorporate confirmation into their trade activity, because if you were simply sitting on your hands on a 1 day close below the 20-day Brent, the following Monday, not only did it close above the 20-day, it was a big gap. I mean, we had basically closed close to the low, gapped to the upside on the following Monday, and we then recaptured the 20-day and once more have held it since. So again, confirmation, very important to the trader in some semblance here, right?
Yeah, and you can see just how far the drop was. I mean, versus the moving average. But look at that RSI. We dipped down. I don't know how low it got there on that, but because prior to that, we'd been kind of hugging up near that 70 level or whatever. We actually dipped a little bit below 50 there on that, I think.
We did about 48.
Yeah, and now we're back up, pushing the quote overbought level on that. And this is probably illustrative of the fact that, hey, even when the market is overbought, it can still certainly go up. We're at an all-time high, and we were just overbought, so to speak, mid-July and kind of mid to late June. Overbought. The market's still been going up there. So those are all, those may be signals that we make some adjustments. And it's not, remember, we're not an all in or all out of the market necessarily. You can make adjustments to try and, recognize, hey, we've made a lot of money. The market may be ready for a pullback, but I still want to be bullish. Maybe there's some adjustments you can make to that. You can adjust stops. You can layer out a little bit of a particular position. You can diversify into other positions, yet still participate in the bull market.
Yeah, it's a good reminder, Brent, that a lot of traders do not employ the all-in, all-out approach with their trades. Rather, a belief that the probabilities shift, a break below the trend line that was working, the 20-day moving average, maybe suggests that things aren't as strong as they were for the prior 69 days. And so that one little blip on the radar screen could be reason for some traders to sell a little, lighten up a little. But by having recaptured the 20-day, having held it since, a lot of traders would have looked at the trades in the last, say, not necessarily yesterday, but the days prior as reasons to start believing that things were maybe okay and we're going to continue the trend that we've been holding here, essentially. So even with one close below the 20-day, it does eliminate our streak, unfortunately. But right now, we're seemingly starting a new one. So let's try not to fight against it here. One other note as it relates to the S&P, Brent, I think is the move in the VIX. I got to mention this because we have seen the VIX just collapse. And, I've been talking to a certain extent about the movement in the VIX could very well lead us to a bit of complacency. And I just want to encourage traders to be disciplined in their process, to try and work to avoid being complacent. And that means, to me, what it means, Brent, and I'd love your input on this, obviously. If we're avoiding complacency, that means we are properly managing our trades along the way, not simply believing that what we own is apt to go higher, but rather still managing our trades along the way, raising our exit strategies, and incorporating a process that will get us out of these positions when we need to be getting out of these positions. But Brent, that still has to take hold here, right? I mean, the VIX falling is great, but at some point, that's not going to continue.
At some point, that's not going to continue. And you just look at the history of the VIX, you can see it. It spikes up occasionally. Right now, our VIX it's lower than it's been since, I think, December. Yeah, since December. And that's just kind of saying, oh, people are comfortable with the market. Well, that's the challenge. What's that Buffett quote? buy when others are selling and sell when others are buying. We're not advocating buying or selling here necessarily.
Right.
But the principle underlying the quote is this: when people are complacent, that's when there's more danger. When people are
Mhm.
not on the lookout, so to speak, for the danger, that's when there's more danger in the market. And when the market's kind of going crazy, that's actually maybe perhaps a buying opportunity for a lot of investors. And so right now we're in that period of time when the people are a little bit complacent. And so that's the time to be a little bit more cautious in perhaps in terms of reevaluating your positions. Don't be lulled into a false sense of security.
That's a great way of putting it. No false sense of security. Let's not be believing that there's only one move for the market to make, although it feels like that over the last 4 months or so. Challenge yourself, be disciplined, raise your exit strategies, and manage your trades appropriately. I think that's the best thing we can encourage traders to do, even though we continue to see bullish optimism pervasive in the market here, Brent. And another area we can clearly see that is the NASDAQ 100. I'm going to say the same thing I've been saying a lot in the last 4 months, Brent. Everything we said about the SPX can be applied to the NDX here, can it?
Absolutely. In fact, if anything, it's more bullish. I mean, percentage-wise, it's gone up, and that's typical when the market's going up. The NASDAQ tends to lead the way. You know, the NASDAQ has more like IT exposure, right? Well, that's been an absolutely stellar sector in the market right now with a lot of these mega caps. And but you know, the trend, I don't really have much to say on the trend because that's the same. But it does show that these are the types of stocks that lead the market. We have seen lately more little less market breadth in the rally as opposed to just not just leadership but really outperformance in these large kind of mega cap companies here.
Yeah, quite a bit of outperformance as it turns out. And leadership from technology broadly has been solid, but we should be reminding of our of the point that not everything in technology is going beautifully. In fact, I think I could pull up just while we're here. I think there is a group we could check out, software, which has been rallying and maintaining, but there are many individual positions within this space that are not participating in a similar way. So I bring that up because, of course, Brent, when we think about the broader market and we do this top-down approach, we do it by starting broadly and whittling into the from a sector basis into industries and into sub-industries. Even within the sector, there's always going to be some winning spaces and some losing spaces.
Absolutely. So the sectors are not monolithic, and one, you know, and same with the market. And so there's bigger companies in there that, and remember, everything when we're talking about the NASDAQ, when we're talking about the Russell 2000, when we're talking about the S&P 500, these are market cap weighted indexes. So the bigger companies tend to be the ones that move the market as well, but move the market more. But within any of these, there's winners and there's losers.
Yep, we'll always find that. And then, you know, one of the things that we say in difficult markets is that there's a bull market somewhere all the time. Right now, it seems like there's a bull market just about everywhere, which is a little bit different than the norm, I would say. But Brent, let's move into our Russell. Let's take a peek at our small caps, which have been leading and are today making a pretty significant move all of a sudden. We had been in a consolidation here. And a lot of traders, Brent, would take this action over the last 2 months or so and suggest that this has been very bullish, even though it's gone nowhere until today as we break out.
Yeah, and this started yesterday because yesterday we had it was the big winner yesterday among the indexes here, the Russell 2000. You can see that big candle, that big green candle,
Beautiful.
But the question is, we kind of have this channel, if you will, if you look recently, and that's what you shaded. Can we stay above that? And can we break above that, I guess I should say. Well, this morning we're up 0.7%. That's a decent move up, a better part of a percent move up. And so that's, that doesn't mean it's going to stay above it, but that's the technical break, at least, that a lot of traders would be looking to see. Now, if you want it to stay above it, what it would be nice is, even if we pull back a little bit, if we can kind of maintain the upper part of that channel as a support level, and then possibly look for a bounce off there, that would kind of go in line with the whole upward trend thing that you establish gradually increasing support levels along the way is kind of a hallmark of an upward trend. And vice versa on a downtrend, you're establishing lower resistance levels along the way. But in this case, they've been going up.
Yep, exactly that. And Brent, on this chart, the one thing that stands out, at least in the last month, is this huge test right here on a day where we opened very weak, below the 50-day moving average, and yet bulls clearly stepped in and supported the small caps here. Now, that was a questionable day for a lot of traders, everybody, because it was ugly in the morning. It did finish better, but our close was close to the 50-day moving average. The 50-day that day was 21.69, or just shy of it, and our close was 21.67, just below that. So we missed it by 2 points that day. But boy, Brent, the very next day, the follow through from August 1 Friday to August 4 Monday became substantial, and kind of a heads up about the potential of this, really the trend. Even though we were in this consolidation window, man, we clearly got a great signal there, didn't we?
Yeah, and that's the same day that we tested the 20-day, or went below the 20-day on the large cap indexes there. It just kind of shows a little bit of the underperformance of the Russell 2000 during that time frame, because whereas those large cap indexes were fighting with the 20-day, this was fighting with the 50-day. But we had a similar result recently in that we had that strong bounce and then the outperformance here on the Russell. So, what the interesting thing is, the Russell, these small cap stocks are often more sensitive to maybe economic worry. A lot of the companies aren't as on a strong financial footing as the larger cap companies. But the economic narrative has changed to a certain extent. A lot of, there's still the concern about inflation. There's no doubt about that. There's still the question of the Fed and interest rates and whatnot. But there's a lot less discussion right now of recession coming. Now, it happens, but you hear it occasionally, but it's the concern about recession seems to have, it's certainly, I'm not hearing that near as much, Kevin, as I was here. And I think that could be helping small caps there.
It certainly seems to be, as does the discussion around interest rates, of course. We're going to look at interest rates momentarily. Before we do, though, Brent, the last thing I wanted just to address was a couple of teaching moments. The first being our opportunity to look at the range we've broken, which is about 100 points, and discuss the potential for that to run 100 points now that we have broken the range to the upside. So our low in this vicinity, about 21.75. Our high in this vicinity, about 22.80. So that's right around 100 points. So let's just make it real basic and easy. 100 to the upside from a measured move perspective. Measured moves are never guarantees to be achieved, but that might give traders the opportunity to target somewhere between, say, 23.75 and 2400 perhaps, for a spot of rally, for this rally to move to, with potentially a pause or a breather at that 23.20 level. But Brent, anything about that measured move opportunity that stands out to you here as well?
Just, I think they can be helpful. Not just this, kind of channel measured moves, but other measured moves that we use off of price patterns. They can be helpful, but it doesn't mean it's going to instantly go there. But it also, I would suggest, consider when you come up with a measured move, just kind of ask yourself, does that seem like a reasonable measured move? Because I'll tell you, there's sometimes I've done measured moves and I go, wow, that's like really way out there. I just don't, it doesn't seem very realistic for the stock to go that level. So just kind of give it the sniff test, so to speak. Does it seem like a reasonable? And in this case, it does seem reasonable. Doesn't mean it's going to go there, but it doesn't seem out of the question. If this trend continues a little bit longer, we could easily move up 100 points on the rut.
Sure. Yeah, I like it. Give it the sniff test. Always a good idea. Sometimes you're absolutely right. You make those estimations of a very deep pullback. This is the S&P, for example, is a great one. When you look at the move we made from the peak we made to the trough we hit in April, and then the breakout. Everybody looks at that and says, well, that means you can move the depth of the pullback. That was a nearly 20% pullback. So those numbers are kind of surprising numbers when you start making those calculations. So I like what you said. Always give it a sniff test and maybe pull back a little bit. Don't be overly optimistic about your opportunities to make a target. The other thing I really quickly wanted to speak to, Brent, was just on the intra-period here and looking at things like the pivot points as we incorporate them potentially into our visual of market movement on an intraday basis, because we had a couple of questions about the pivots, and I just thought we'd give it a good opportunity here. The thing that stands out on this, Brent, is the open trade did not get quite to the R1, but we're working our way clearly through it. And while it didn't open above R1, one takeaway here is that the gap strength is notable. And having made a very short-term low here today, maybe traders are going to position on a short-term intraday basis against the intraday low as a new vicinity for what they might call their pivot for the day. And I'm pointing to the pivot in pink here, everybody. Just a reminder that pivot is, simply put, the calculation from yesterday's price action, taking into account the open, the high, the low, and the close, and then giving us an equilibrium price around which traders would expect to trade in this instrument for the day. But that now maybe has shifted, Brent.
Yeah, so when you come up with these pivot points, they can act as potential resistance or support. Plus, those aren't the only, if we gap, it's not the only resistance or support levels. In this case, if there's a gap, it's just like a long-term chart. If you have a long-term chart and a stock gaps, we'll look for the top of that gap to potentially act as a support level. It may or may not, but that's where, so we're just going to take the longer term time frame and consider it on the shorter term. In this case, these are 5-minute candles. You can still do the same technical analysis measures on these intraday time frames as you would on longer term. So think about the different things. Here we're talking support and resistance. Okay, we can use gaps. Longer term, we can use them, yearly, on looking at yearly charts or whatever. You can do the same thing. You can look at trends intraday. You can look at moving averages intraday. That's one of the things about technical analysis. Doesn't matter the time frame. You can adjust. You can adjust it. The same principles hold. So use those same technical analysis skills that you know, and maybe occasionally look at an intraday chart. I'm not advocating. Nobody needs to be a day trader here or anything like that. All I'm saying is use the technical analysis here, and you can come up with the things to guide you in terms of where to look for support, resistance, or trend, or things like that.
Yep, I like that assessment, Brent. The other thing we need to look at here as it relates to the small caps, we're going to check in on the 10-year note, which yields continue to be pulling back a little bit. Expectation, according to the CME Fed tool page now, is in excess of 90% for a September rate cut, and further, better than 50%, I think, on this idea that we could have a 75 basis point lower rate level Fed funds rate here by the end of the year. So there's a lot of optimism for falling rates, which can lift the Russell. Anything you might like to share as it relates to yields here, Brent?
I don't know, Kevin. I mean, I could always talk about yields, but I think that it does seem like, first of all, the Fed funds, the Fed watch is no guarantee of what it's going to do. And we've seen that shift significantly because 2 weeks ago, when we were looking at that, it was giving us like, I don't know, a 20% rate chance of a rate cut in September. And now we're shifted up. I forgot what you just said it was over 90.
Over 90
now, I think. So it can shift. Although at this point, I think most market observers would say it would be surprising if we did not see a September cut on this. And that certainly can impact the market, but that seems to be where the sentiment lies.
Right. And for one final note, everybody, remember the market likes to lead, likes to be ahead of these ideas. I'll point out that, Brent, when we got our cut, last time we got a cut, it was back here, and the market had already sent the yields down. We got the cut and yields rallied aggressively. So don't mistake the idea of an actual cut coming to pass as meaning we're going to see yields pushed lower necessarily. So be aware of that.
Over the longer term, there tends to be a pretty good correlation between the Fed funds rate and the 10-year, but over shorter periods of time, there's just no guarantee of what's going to happen.
It's the truth. Of course, we talk markets. We don't talk guarantees. We talk probabilities. That's what it's all about. Let's peek in on these semis here, Brent. Looks like semis have used the broad market weakness over the last month plus, and instead of holding the channel that I'd drawn in, they went ahead and decided, well, we're going to pull back to that longer range 50-day moving average for a support test and move off of it. And now we have done just that with a new level possibly being achieved.
Yeah, I mean, it's been strong. If you think about the biggest semis, NVIDIA is number one on the list. It's been just going up and up. Gap up today on AMD, which is a big company. AMD is up 5% today. And that is probably helping to push this semiconductor index higher on that. And so, just semiconductors, a lot of big tech companies that are kind of helping to spur the market, but above the potential breaking through, a little breakout there on that.
Yeah, there's your weekly look, everybody. I could put a bit of a rectangle up to where we've been and the all-time highs. That seems a little notable as well. And obviously, if this indice makes a new high here, getting the RSI into overbought conditions on this longer range chart would certainly be positive for the space. As we often say, new highs are not traditionally considered bearish. So let's not fight against the trend necessarily. Okay, so we look here. Some of the other things that we had a request to do, Brent, were a couple of the details, macro level stuff that we've previously incorporated. So let's look quickly at the dollar, which may have given us a head fake. About 2 weeks ago, we were talking about this breaking out and how this could be the headwind for the broader market, notably those largest corporations with multinational exposure could be at a little bit of risk. And instead, Brent, it has just been pushed back down. So the dollar continuing to fall. Your thoughts on this? Obviously, we're going to look at gold here in just a second because there is a relationship to monitor.
Yeah, there is a relationship, and we'll see the gold chart in a little bit, and it's going to look pretty opposite almost here. But yeah, I mean, the general trend was down and it looked like we got a higher high, higher low, but now I don't know here. We've broken that. So I'm not sure where the dollar's going, but the clear reversal of trend we were maybe looking at about 3 weeks ago is not so clear anymore.
No, it is not. And yeah, we could say that it's in the support line level, but it is below the 20, is below the 50-day moving averages. Not ideal if you're looking for the dollar to strengthen. The thought that I had initially had was that a rallying dollar could put the kibosh on a rally in the gold. And we did get an attempted breakout there, but it did not materialize. Now I'm left to wonder if this has just all been consolidation for the spot in gold here, and it's positioned for a potential breakout at this point. But you see something similar, I imagine?
Yeah, I mean, what you drew there is kind of like an ascending triangle. And so that's generally, generally we'd probably consider that more bullish. And the general trend, you look at the moving averages, they're headed up. A little bit more bullish there, but of course there's a lot of macro considerations in addition to the dollar and the traditional inverse relationship between the dollar and gold. There's other factors on there. There's just the idea of gold as a flight to safety type instrument. Well, hey, I'll tell you what, I mean, the market's doing pretty well on its own, and gold has been doing pretty well over that same time period right now. So it's not like people are panicky, it seems like, going into gold, but it's just an alternative asset that people can do to try and find places. Maybe if they feel the market's a little bit frothy right now, well, maybe gold is a place that people have been going.
Yeah, maybe so. So Brent, as we move off of this, are there any individual groups over here you might like to peek in on in terms of sector movements today? Anything catching your eye?
Well, what I would say is, first of all, let's see. So discretionary is having a good day. If we click on discretionary, and so discretionary is up 1%, okay, a little over 1%. So today's a good day on discretionary. Now, discretionary hasn't been a standout sector so much of late. It's been kind of middle of the pack, I think.
Yeah.
But today it's up, and so if you ever are going like, well, wow, discretionary is going up. Well, I think, let me just double check. I think that's the top performing sector right now. It is the top performing sector right now in the S&P 500. And you want to see what stocks are on that, go to the heat map. Go to that Market Watch tool and click on Visualize, and then you can pull up the individual sector if you want. So you see what Kevin's doing. He's clicking on S&P 500, and then he opens it up, and you can see, well, what's in discretionary? Amazon, Tesla, few little names maybe you've heard of, Home Depot, big companies are nice bright green. So that's what's driving discretionary. Now, earlier in the session here, Kevin, you were saying, just because a sector is going up, it doesn't mean everything in that sector is going up. Well, why is it going up? The biggest companies in this sector, I already mentioned, are the ones that are really driving this up. But you look at Booking.com, Starbucks, Chipotle, Yum, not so great today. And so it's just going back to the idea that these sectors are not monolithic things.
No, they are not. But getting a peek at what's moving and moving favorably can be a real, instruction on where you may have opportunity any given moment. So that seems notable. I'll agree with you there. Discretionary. It is also notable that healthcare is moving because healthcare has not been participating of late. As you can see, we remain in a downtrend. Yeah, we're moving off an area of potential support, but not exactly uptrending here. And for a lot of traders, they're still going to have to be a little bit cautious about what you're getting out of healthcare. A downtrend here in the intermediate term and a much lengthier downtrend. If we were to look at, say, a 3-year chart here, you can see we peaked in about August of last year. So it's really at least a 1-year downtrend where we're trying to find some semblance of support. Haven't quite done it just yet, but we'll see if healthcare can get out of its own way here at some point in the near future. The other leader has been financials, and financials is kind of notable. Check this out, Brent. I actually was working on this a little bit this morning, noting how we had moved through, if I use this band here as resistance, but decided to use this as a little bit of a diagonal move. Look at that. I mean, we broke that ledge, we rallied, test with a nice tail here, tested it here again. But ultimately, Brent, we have basically held and are creating what kind of looks like a W pattern here now that leaves bulls more or less in charge on financials as well. And that's not a negative as it relates to the opportunity for the broader market to continue to rally.
Yeah, the market's really across most sectors, with a couple exceptions, such as like energy or something. The market has been pretty broad-based bullish here for the last month. Healthcare, we already looked at it, has been an exception to that, although today it's been good. And in this case, financials, that's a pretty strong pattern. Yeah, I don't know what else to say on that. We're broken above that 20-day moving average, and so showing some strength there.
Yeah, I think that's all we have to say, as it turns out. Brent, I want to hit up a couple of stocks in the news today on headline changing details. We just got done talking about discretionary and the like. I thought we could look quickly at a couple of downgraded positions. One of them is On Holdings, downgraded to underperform from hold. New target here is at $40, which is down from $50. The firm at Jefferies, that is, believing that 2025 represents the company's peak sales growth rate, and going forward, their U.S. door count expansion is likely to slow and moderate in 2026 as retail orders flow back into Nike. So the concern being that Nike may have made a shift in its underlying trend, and now you might be seeing the little bit of a give back as it relates to a competitor in On. I thought that was an interesting point, but only because you got a pretty healthy downtrend here in the last few months.
We do have a pretty healthy downtrend on this. And, it is kind of interesting. This kind of goes to the idea the market is kind of forward looking. And that goes to what the analyst was saying as well, is, hey, well, they've been doing pretty well, but this kind of represents a peak. On this is shoes, and if you look at, I don't have one for you. We don't have one for you, but if you look at like graphs of growth rates for the companies of Nike versus On's been just like growing very rapidly. Of course, Nike is the behemoth in the industry. It's huge, the biggest player there, and they've had their woes here the last couple of years. They've lost a little market share, although they are still the leader there. So, you can see that play out on that. And yeah, the general trend, that 50-day potential, nice little bounce there off that nice. It's not a good thing for the company.
Nice if you're bearish, Brent.
Yeah, nice if I'm bearish. Significant bounce off the 200-day confluence there. Yep. And that 50 looks like it's about to cross below the 200. That's the old death cross thing that people talk about. That's not a bullish sign, needless to say.
Yeah, you're right about that. I'll point out that that cross situation is not exactly benefited one way or the other as I look at this, Brent, because the crosses have not, when we go through these meandering trends, the trends that are maintained, the crosses carry far less weight. So it's unclear at this point. What we're looking for is something a little longer range. Okay, there was one downgrade. I also had an interesting downgrade on C3AI in a space you wouldn't necessarily expect to see downgraded, everybody. But that's what we got here. Oppenheimer downgrading C3AI to perform from outperform. They did not apply a price target to it, suggesting that the company announced extremely weak preliminary fiscal Q1 results, implying a 35% sequential revenue decline. Not great. And yet, Brent, what you're getting, it looks like, is a little bit of a bounce, but I'll remind us, counter trend bounces happen all the time. They're just less reliable and tend to fade pretty quickly from time to time, don't they?
Yeah, and this was an interesting one because they kind of like pre-announced the ahead of where their scheduled earnings was on this, and obviously the market did not like this. That's why you see the earnings tag there on the chart ahead, a couple weeks ahead of now. So that they kind of just took that. So that will be less of that's not the event that now. This one kind of came out of the blue here on this, but that's a gap down. We'll see if that 14.7 can hold as a support level. That's what bulls are hopefully going to, bank on here, I guess. But that trend is gone.
And if you're looking at it very short term, traders are apt to watch that high that we made just through 2 days ago. And we're right at the pivot right now, the R1 that is, and it's an area that if you can get through it, you might see traders kind of push that into this gap ledge around 1775 or so. But it's short term, very detailed short term view of things. Doesn't mean it has to go there, but that's something that some traders are going to certainly keep an eye on now that we've kind of created a very quick new high after the sell down here. So eyeballs will be on that one. Now I do have one that's going to look a little better in terms of it being an upgrade. How about an upgrade on PanW? We talked about software in general. PanW has, Palo Alto Networks, aka PanW. Not exactly trending here, no matter how you look at it, Brent. They did get upgraded by Deutsche Bank to buy from hold with a new target at 220 up from 200. But making heads or tails of this trend is more than a little tricky here.
That is tricky, and there's a lot of different ways you could look at it. We could look back at the beginning of the year. The low there is kind of a similar low to where we are now. That's maybe you can consider that a little bit of a support level. Of course, we broke below that in April, but nice little reversal on that. And of course, if we could say, hey, there's potential resistance a little bit above that, well, maybe the 205 level, 210 level there. And are we starting kind of this big channel between those two? And we were just kind of getting off the bottom end of that. No, it's not a bullish chart right now, other than we have some bullish momentum would be a good thing. And you know what? Sometimes when you have a company and it's dropped enough, and we dropped pretty significantly from 210 down to 165 or so. Yeah. That can change analysts and say, well, hey, look, it was too expensive then. Now it is looking a little bit more reasonable on that.
Yeah, that might be what's happening there. And then I just, sometimes on these daily charts, Brent, you have to be a little bit discerning when you're finding the chart, because you're not going to get everything to line up beautifully. We definitely had the tantrum move here in early April, and it took you outside of the channel. But ultimately, that's really the trading in here, right? 165.66 up to 210 or so, or pardon me, 205 or so, about a 40-point range. We can also look at this on the weekly, which would help to decipher things a little bit. I'll tell you what, Brent, when you look at this on the weekly, that kind of gives you a better understanding of the real trend here. We might be rangy over the last year plus, and yet the long range trend does appear bullish.
It does. That 100-week moving average, hey, we're bouncing off that. That looks good. And just going back one sec to what I was mentioning before in terms of the valuation, the 5-year average PE on this is about 41. Current PE is around 107. So, and it was probably significantly higher a few weeks ago before we dropped. So, there are factors even for traders where we're focusing a lot on the technicals. There can be fundamental reasons why analysts will make a downgrade or something like that then subsequently affects the technical analysis.
That's a great reminder, Brent. Not every trader relies heavily on news, but I think it's imperative that traders make note of news and then look for opportunities that give you a new shift, meaning you moved through a very important area of resistance or support, and it happened at the time of the news report. That can be very instructive, Brent, because that lets us understand sentiment shifts in how traders are trading these stocks that we monitor and watch.
Yep, absolutely, Kevin.
All right, everybody, I think we are just about at time here. We have had a fairly wide-ranging conversation today. We covered a number of key topics, and noting today as I look at what's happened since we kicked off, we have pulled back from our peak a little bit in the S&P. So we're off our highs there. We're off our highs in the NASDAQ, and the Russell, on the other hand, continues to push upwards. So positives on small caps here, and a little bit of short-term breath happening in the S&P and the NASDAQ 100. We'll see how that plays out going forward. Always more to come from us here on the channel, everybody. So keep it tuned to the YouTube coaching channel here. Big thanks to you, Brent. Always love having you on a Wednesday. I imagine we got you back a little later today, don't we?
You do. At noon Eastern time, I'm managing an options portfolio. So if you're interested in options, feel free to check that out. Also, let me just mention, I know we're running out of time here, but Kevin, you're off to Chicago, I think, for a workshop this weekend.
Thank you. Absolutely. Yeah. Tomorrow I'll be leaving to head back to Chicago. We'll be out there in the Schaumburg area and doing technical analysis and option strategies. I look forward to seeing those of you that can make it. Again, as a reminder, if you haven't been to one of these events, they are a blast for us as coaches to be there for. For those of you that can make it, we think they're a lot of fun for you as well. So love to see you out there, everybody. Hopefully you can make it to one. Head up the schwab.com/coaching calendar for our live event breakdown. See where we'll be the rest of the year. Big thanks to Cameron May as he just posted our X handles there. So follow us on X. If you like the conversation, hit that thumbs up button below for us as well. And make sure you're subscribed to the Schwab Trader Talks page here on YouTube. We appreciate y'all joining, everybody. Have a fantastic Wednesday and look forward to seeing you again real soon.